Okay, let's just get right into it. If you're in the crypto space, you have probably been feeling it lately, a real sense of frustration. It seems like everything else is rocketing to the moon, while crypto just feels kind of stuck. So today, we're going to break down the powerful forces that are holding Bitcoin down. And we'll explore the argument for why this lag might actually be a massive opportunity in disguise.
So let's set the stage. The wider market? It is on an absolute tear. We're talking stocks, gold, silver. They aren't just doing well. They're smashing all-time highs, one after the other. The money is definitely flowing, and confidence in traditional assets seems to be at a peak.
And right here, you can see that disconnect in black and white. While all these other assets are climbing, Bitcoin has just been grinding sideways or even dipping. This gap, this is the source of all that frustration. You can see the party happening everywhere else, and it makes you wonder, what is going on here, right? Why is crypto the odd one out in this huge asset boom? Well, to figure that out, we've got to pull back the curtain and look at some pretty powerful and often hidden dynamics at play. First, let's talk about what's happening inside the crypto world. Because, what you see on the price chart, that doesn't even begin to tell the whole story. There's been some serious selling pressure and, frankly, some manipulation happening behind the scenes.
To really get this, we have to look at this one key player that the market watches like a hawk. They call him the insider whale. This is a huge account, and all their public communications, their tweets, their comments, it all paints this picture of someone who is incredibly bullish on the market.
But here's the crazy part. While this whale is publicly saying, I'm going long on everything from Bitcoin to Solana, on-chain data shows them quietly moving almost $500 million worth of Bitcoin onto an exchange. And if you've been in this space for a while, you know that is the classic move you make right before you sell. This contradiction, this do as I say, not as I do, it creates a ton of uncertainty and looks a lot like market manipulation.
But look, it's not just this one whale. It's been a perfect storm of selling pressure. We've seen huge dumps on Coinbase, which looks a lot like institutions doing some tax loss harvesting. You have long-term holders who are taking profits on every tiny little pump, and then there's this. A reported 300 times billion dollars from wallets that have been dormant for years suddenly coming back into circulation. That's a massive amount of new supply to hit the market.
And here's the real kicker. With all this selling going on, there just aren't enough buyers to soak it all up. Market participation has basically cratered to levels we haven't seen since 2018. A huge reason for this was that October 10th liquidation event. That massive cascade that wiped out tons of traders. It completely changed the market's dynamics and left it super vulnerable to all this selling pressure.
Okay, so that's the mess happening inside crypto. But that's only half the story. Now we need to zoom way out, because the core argument for why crypto will eventually bounce back, well, it actually has very little to do with crypto itself. It has everything to do with the global financial system. It all starts with this just mind-boggling number, $45 trillion. That's the amount of money floating around the globe right now, and it's only growing. This ocean of cash has to find a home somewhere, and it's the real reason we're seeing those all-time highs in stocks and gold.
And guess what? That number is about to get even bigger. Central banks, especially the US Fed, they have a playbook and they stick to it. They've already stopped tightening. The next step is cutting rates, and after that, inevitably, comes expanding the balance sheet, which is just a fancy way of saying, you guessed it, printing more money.
And hey, this isn't just some abstract economic theory. It's become a political football. You have major figures like Donald Trump putting immense pressure on the Fed to cut rates and stimulate the economy. The political will is there to create even more liquidity, and all that money is eventually going to be looking for a place to go. So, this is where it all comes together. All these different forces, the selling pressure inside crypto and this absolute tsunami of money on the outside, are setting the stage for what the source calls the Great Catch-Up Trade, and they've got a very specific timeline in mind.
So what exactly is this catch-up trade? It's a really simple but powerful idea. When you have one asset that's lagging way behind everything else in a bull market, eventually that big money starts to rotate into the undervalued asset. And when it does, it causes a super rapid, explosive move up to close that performance gap.
Now, according to the source, this isn't going to happen tomorrow. They see 2025 as a kind of transition year. A lot of sideways action, a lot of accumulation where the market finally absorbs all that selling. But 2026, that's the year they're circling for when this catch-up trade really kicks into high gear and pushes Bitcoin to a new all-time high. And you know what? We might already be seeing the very first signs of this shift. Recent data shows that the really intense institutional selling on Coinbase has finally stopped. And at the same time, the Bitcoin ETFs have flipped back to being net buyers, which helps soak up supply. It feels like the headwinds might finally be starting to calm down.
On top of all the market mechanics, there are also these huge, real-world events happening, wildcards really, that the source argues are only strengthening the long-term case for an asset like Bitcoin in ways nobody could have seen coming.
A pretty shocking example is what just happened in Venezuela. Following an operation by U.S. forces, the U.S. now has effective control over the country's oil reserves. And to give you an idea of the scale we're talking about, those reserves are valued at an unbelievable $17.3 trillion. Now, the source material draws a very specific lesson from this. The argument being made is that if a sovereign nation can have its physical assets, even its gold, seized just like that, it makes an incredibly powerful case for a truly non-confiscatable digital asset that nobody can touch.
Another one of these wildcards was the scare around MicroStrategy, one of Bitcoin's biggest corporate holders. A cryptic tweet sent everyone into a panic, thinking they were about to sell their stack. But the reality was way smarter. They revealed they had a massive $1.44 billion cash reserve, which is enough to cover their dividend payments for almost 2 years without selling a single Satoshi. It was actually a brilliant de-risking move. So all of this brings us to the final billion-dollar question. We've got a market that's been beaten down by crazy selling pressure, set against this backdrop of more global money printing than we've ever seen. Is this moment of frustration actually a historic buying opportunity in disguise? Or is this just the calm before an even bigger storm? The next year or so is going to tell us everything.